Auto finance, iPhone, iPad, and iTouch application covers amortization, comparison, lease versus buy, hybrid break-even point, and what-if analysis. Let's take a look at amortization. We're going to supply inputs. Say we supply 37,000, 7% sales tax, registration, cash rebate, down payment, and trade-in value, loan term 36 months, 2.9% interest, payments per year. We are making monthly payment, we are paying a little bit extra every time. So the summary, this is the summary of the loan, and here we are able to pay it off in 33 payments, and we are saving 3 periods, making early payment of $3,200, and savings is $146.52. And this is the detail, this is the amortization schedule, and it gives us year over year, month over month details about the balances. Now let's compare. What we'll do is we'll compare two loans, and here what we are doing is we are supplying, say, interest, the principal, and a loan term, and then we are going to calculate, say this is 6% and 4 months, and previously actually I had added some data, so we'll see that. Now when we go to summary, you will actually see the breakdown, schedules, total payment. So this is how they compare. So 11 total interest, total payment, we are making 40,000, here 41,000. So you can actually figure out which one is better in terms of the total payment. Car lease. Supply MSRP 37,000, base cap cost 35,000, car lease cost is 500, down payment 2,000, trade-in credit 5,000, and other reduction is 200, and residual is we can specify in dollar amount or in percentage. Say 20% is the residual. Money factor, we can either supply money factor or the percentage, say 5% to keep it simple. Lease term is 36 months, and sales tax is 7%. Say we will calculate the lease payment. In this case, we basically come up with the monthly lease payment, so which is $700.78. So we'll go back here, say $700.78, say $750. Okay, we just are interested to find out the interest rate we actually pay. So in this case, we go back, and here we find out the money factor. So the lease application allows us to calculate, number one, the monthly payment. Number two, if we supply the payment that the dealer is quoting us, we can actually find out the money factor or the interest rate we are being charged. Okay. Lease versus buy, and this decision point comes very oftentimes we have seen this. So let us enter the buy input, 37,000, sales tax, we'll just ignore these for the moment, and say loan term is 5 years, and term, and APR is 5%. And now let us supply the lease input. Same input, we just carried over some data. So base cap cost is 37,000, so nothing there. Down payment nothing. Residual percentage is 20%. And now the lease term is, say, 36 months typically. And here sales tax also we will ignore. So we supply, say money factor is 5%. So how does the lease versus buy compare? So here we see monthly payment in the case of buy, in case of lease we see that, and finance charge we see this, and total lease cost is 32,000 and total payment is 41. So basically this is for you to decide which option actually makes sense for you. Hybrid break-even point. So we have a hybrid car, we have a non-hybrid car. Let us find out the mileage driven when the hybrid car makes sense. So 37,000, 29,000, tax rebate 2,000, and your miles per gallon is 45. Here is 30, and miles per year is 12,000. So we'll just leave same. 3, 4, 5, 6, 7, 8, 9, 10. So hybrid say $900 to $700 maintenance cost. We'll add them for 1, 2, 3, 4, 5, 6, 7, 8, 9. And now let us supply an interest rate of 5%. Okay. Now what actually makes sense? So we find that, we need to, we need to find that out. So we see that the fuel price need to be 5.59. So at that it will make sense. So now clear up all those. Let us say we supply a fuel price. So hybrid price is 37,000 and your non-hybrid is 29,000. So $2,000 is rebate, miles per gallon is 45, 30, and we need to find out miles per year. The cost is say 900, cost is 700, and discount is 5%. We're going to add the maintenance cost 1, 2, 3, 4, 5, 6, 7. Now let us say the gas price is $4. So that reduces. So you see that? Okay. Now let us say gas price is $5. So you see this. Okay. Now let us make the what if analysis. 37,000, loan term is 5 years, interest rate is 5. So what is the payment? So we find the payment, and now let us say find out the loan term. So we find that. So we have loan term, and we just need to find out the interest rate. So this is the interest rate. So now we supply all that. We find out what is the principal. This is the principal. So what we have covered here is amortization, comparison, leads versus buy, hybrid break-even point, and what if analysis. You can find out more details about this application and other applications such as mobile banker, consumer finance, and many non-financial applications at businesscompassllc.com website. Thank you very much.